Today we're taking a look at an alternate version of exercise 5-2 on page 256 of the textbook. This is from chapter 5, Reporting and Analyzing Inventories, and this problem relates to inventory cost. So with this problem, we have a company, Wahlberg Associates. They're antique dealers, and they purchased an estate for $71,000, all of the contents of the estate. The terms of the purchase were FOB shipping point. The cost of transporting the goods from Wahlberg's warehouse was $1,200. Now, Wahlberg Associates, they wanted to insure the goods to make sure they arrived safely, so they paid insurance of $400. Prior to putting the goods up for sale, they said, we need to clean and refurbish some of this stuff, and it cost them another $850. With all of this information, we need to try to determine what is the amount that Wahlberg should list as the value of this inventory on their balance sheet. So let's put a little table together and recap all of the cost. The contents they purchased were $71,000, shipping of $1,200, insurance of $400, cleaning and refurbishing of $850. Before we dive further into analyzing these items, let's refresh from an item from the LearnSmart module on the difference between FOB shipping point and FOB destination. The big difference between these two types of shipping cost is where title transfers for the goods. With FOB destination, the title for the goods transfer once they reach the buyer. So the seller owns the goods en route from their dock to the buyer's dock. Since the seller owns the goods en route, they therefore pay for the shipment of the goods. So FOB destination, that's being paid for by the seller. Title transfers when it reaches right here, the buyer's dock. FOB shipping point is different. Here, title transfers the moment that it leaves the seller's shipping dock. So as soon as it gets loaded onto the common carrier, then possession changes, title changes at that very moment to the buyer. Well, since the buyer owns it en route, therefore the buyer pays the cost for having it shipped en route. When it's FOB shipping point, that delivery cost is a cost the buyer incurs, so therefore it becomes part of the cost of the inventory. So let's recap then here. Contents, they paid $71,000. Does that become part of the cost of the inventory? Well, sure. FOB shipping point, the $1,200 that was paid, who paid for it? Well, if it's FOB shipping point, the buyer paid for it, so then that becomes part of the cost of the inventory as well. The cost the buyer paid to insure the goods of $400, well, that becomes definitely part of the cost. How about the cleaning and refurbishing? Is that part of the cost of the inventory, or is that just an expense for the company? Well, since that was work done to get the inventory ready to sell to the customers, that also becomes part of the cost of the inventory. So we add these all together. Therefore, the total cost of the inventory would be $71,000 plus $1,200 plus $400 plus $850 equals $73,450. That would be the amount they would record onto their inventory.